Welcome everyone to this webinar on the Farm Business Resilience Program and how to develop a Farm Business Resilience Plan. The Farm Business Resilience Program is jointly funded through the Australian Government's Future Drought Fund and the Queensland Government's Drought and Climate Adaptation Program. Producers are being assisted in accessing funding by the Queensland Farmers Federation and the Nursery and Garden Industry Queensland. The Farm Business Resilience Program aims to build the strategic management capacity of primary producers to prepare for and manage business and climate risks. This will help producers improve their economic, environmental and social resilience. The Farm Business Resilience Plan identifies goals and assesses strategies and plans to manage risks, including drought. A business plan should be evidence-based, incorporate relevant information from training, and be tailored to the purpose of the business operation. It should outline how actions will be implemented, monitored, and reviewed. In the About Our Business section, the names of the business owners are listed along with business details, including the business name and address, ABN, email address, and telephone numbers. Our property is the name and address of the property that is the subject of the business plan. Where more than one property is covered by the business plan, list the additional properties in numerical order in the table provided. Our primary production operation is where you add details of the primary production operation under 5 separate headings. For example, we operate a production nursery near whatever your closest town is. The area of our nursery is the area of the property. Our typical annual yield off this area is how many plants or units are produced. In a normal year, the gross value of the production is approximately so many dollars gross income from plant production. We normally employ so many permanent, casual and/or seasonal staff. The section on family members and employees identifies roles and responsibilities of people involved in the business operation. You should include family members and other people such as employees, business advisors, agronomists and DAF extension officers. In section 2, describe what you want to achieve with your primary production business. The individual dot points below are examples of what people may be motivated to achieve. You may wish to say that you want to run a profitable and sustainable business that provides for your current and future needs, can withstand the adverse impacts of climate and market variability, is a sustainable land management system, and is a viable business for future generations. Section 3 covers the goals of the business under 4 categories: production, natural resources, business, and personal. Each category of goals should cover how the goal is going to be achieved, the timeframes it is expected the goal will take to achieve. These timeframes need to be consistent with the size of the project. For longer timeframes of 2 years or more, annual milestones to monitor progress should be included. And finally, how will you measure the success of the goal? Section 4 considers how risks are to be managed. The risks need to be identified and strategies developed to lessen their financial effect on the business. Actions identified through this process are recorded in section 6. In the business plan, risks come under 3 main headings: production, business, and personal risks. Production risks include climate and weather, such as drought, fire, flood, and hail. Examples of strategies to address these risks could be to maintain fire breaks and firefighting equipment in good condition, monitor rainfall and flood forecasting, install hail netting, or purchase hail insurance. It should be noted that risk management for drought is covered in more detail in section 6. Biosecurity risks can come from major plant diseases or pests. A biosecurity plan can be put in place that is reviewed and updated on a regular basis, and plant diseases and insects can be reduced by crop monitoring and management. Examples of natural resources risks are erosion control and drainage water management. Erosion can be controlled by having impervious, non-erodible surfaces in drainage systems, and drainage water from the production areas can be captured and used for irrigation. Business risks include financial risks such as cash flow, debt levels, adequate carry-on finance, equity level, adequacy of loan security, ability to increase borrowings, and interest rates. Strategies to manage these risks could be to monitor and review interest rates, as well as interest rate risk margins and loan term arrangements. Maintain an honest and open communication with your bank manager. Ensure equity is funded through profit and not just inflation. Analyse the profitability of the enterprise and monitor the change in net worth over time. Market risks can include loss of sales through broader economic fluctuations, which can be managed by closely monitoring economic cycles and adjusting production levels to suit. Personal risks include workplace health and safety. These risks could be addressed by having workplace health and safety as a priority for the business, with a workplace health and safety risk assessment being completed and implemented and standard operating procedures available for staff training and reference. Key people need to be considered, such as how would your business cope if a key person was out of action for 3 months. This could be addressed by having a training program to have more than one person able to manage each role. Family considerations such as marriage, succession planning, divorce, and children's education also need to be addressed. An example of this is to have a current succession plan that is documented, discussed with family members, and reviewed regularly. An education fund can be established to meet future school expenses. A succession plan, last will and testament, and enduring power of attorney are significant business and personal risk management strategies. Formal succession plans provide for a smooth and transparent transition of handing the production operation to the next generation or for future sale of the business. The absence of a last will and testament when someone dies can have significant consequences at a personal and business level. Legal advice about an up-to-date will is recommended. An enduring power of attorney is important if a parent or family member becomes mentally incapacitated. Section 5 is about how dry conditions and drought are managed. This section outlines strategies aimed at managing the risk of drought and its effect on your business. New infrastructure and practices may be identified to help your business operation during the process of reviewing this. New actions can be listed in Section 6. An example of how a business may plan to manage for dry conditions and drought is for the business to use weather and seasonal climate forecasting sites to make decisions about seasonal variations and drought conditions. The business can identify drought preparedness strategies such as having adequate water supplies and improving water use efficiency. Farm management deposits can be used as a financial buffer for drought periods. During a drought event, you may plan to use various management strategies and activities to manage water supplies, adjust growing schedules to meet changing demand and production capabilities, and regularly review your financial position and adjust as required. You may also make use of personal and community support measures that assist families with their health and well-being, and use farm management deposits as an additional tool to manage the financial position of the business. To recover from a drought, areas that need to be considered are how the business plans to recover financially and bring production back to pre-drought levels. After the drought, you need to formally review what worked and what didn't, and changes that need to be made to planning, management, and post-drought planning. It's important to keep in mind the need to revise these plans as time passes. For example, during a drought, check to see if the strategies outlined in your business plan are the strategies you plan to continue to use to prepare, respond, and recover from drought. Section 6 outlines the actions that you plan to take to achieve those outcomes identified in the other areas of the business plan. The areas that need to be considered are what are the actions you plan to put into place, how you plan to put those actions into place, how long it will take to implement the plan, and how the outcomes will improve your business. This information will be particularly focused on when assessing your application for the Drought Preparedness Grant. Section 7 identifies whether you completed the business plan yourself or consulted with another person or persons. Seeking help from a third party can improve how well a plan is tailored to your circumstances and improve the outcome. Section 8 is a confirmation that the business plan uses assumptions and strategies based on the primary production business specified in the plan. A business plan is a living document, and it's recommended that it be reviewed at least annually, or more often if there are significant changes. When seeking finance for new activities, an updated business plan could provide more support for future applications for funding than an outdated plan. Also, keep a record of reviews of the Farm Business Resilience Plan for future reference. Section 10 is a record of the completed activities identified in Section 6. Keeping a record of completed activities shows a track record of how projects have been addressed in the past and can be used when applying for funding in the future from lenders such as QRider. If you require assistance completing your business plan, please contact NGIQ or the DAF Customer Service Centre. Training workshops are available to assist you in completing a farm business resilience plan, or you can watch an online tutorial to step you through the process. For assistance with grant or loan applications, please contact QRider on 1800 623 946.